guys, and welcome to Money Talks News, the podcast. It's designed to make you richer one day at a time. I'm your host, Stacey Johnson. I've been investing in stocks for, I hate to say this, 45 years, and I have made millions of dollars in the stock market. With me is my friend, coworker, and novice investor, Aaron Freeman. Hello, Aaron.
Hello, which I have not made millions of dollars in the stock market.
Hey, the day is young, my friend. Okay, guys, today we're going to talk about how to make money by investing in Trump 2.0. We're going to start by recapping what we've already discussed before in other podcasts, namely what should work under a Trump presidency. Then I'm going to tell you about some more recent observations that I've been making and how I'm acting on those to make money. Before we begin, though, a standard warning. I'm going to talk about specific investments, none of which may be appropriate for you. Consider these ideas, but remember, this is risky business. Investing in stocks is risky. Always do your own research. Make your own informed decisions. Don't just blindly do what I'm doing because I'm not in the same financial situation you're in. Okay? Let's begin.
And I'd also, before you start, Stacey, I'd also like to thank our subscribers, all of the new ones that come out. We've got new subscribers all the time. And I also want to tell everybody that please leave comments. There was a comment made by Sandy who said, thank you for clarifying bond vigilantes a few days ago in our podcast. Things like that help us, figure out what these shows should be about.
Yeah, actually,
please leave comments. We do read them.
Want to hear. Yeah.
Yeah, we do read them. So anyway, carry on.
And also tell your friends and all that stuff too. Let's begin, Aaron, by recapping what we've discussed several times before, namely what's going on with Trump. I mean, one thing about this guy is that he is very on the surface. I mean, you know what he's thinking because I don't think he keeps any thoughts to himself. So he's been very clear about what he wants to do. For example, he has said he's into tariffs, right? He's trying to build up the American economy. He's trying to cut taxes. He's trying to cut regulation. And these are big deals, and they matter to certain segments of our economy. And so trying to focus on those segments may make you money. Now, he may not be successful, but what he's saying and boy, is he talking like he's only been president for like 2 weeks, and he has said a ton of things. So, for example, the industrial sector. Obviously, what Trump wants to do is bring manufacturing back to America. Super clear he's been on that. So right. Investing in the industrial sector might be a good idea. So companies involved in construction, machinery, manufacturing could be good ideas. Now, there is a sector fund, an ETF, that's an exchange-traded fund. In other words, a collection of stocks for those of you who are novices. And so you can invest in a whole sector of the economy rather than one company, which is generally going to be safer. Although taking a bet on one sector of the economy isn't as safe as buying the whole economy, like with an S&P 500 index fund. But there is an industrial sector ETF, and there's one called the Industrial Sector Spider Fund. XLI is the symbol. We're going to have all this stuff in our notes. I don't figure you have to write everything down or anything like that. Another thing, the financial sector. Why the financial sector? Because of regulation or lack thereof. As regulation goes away, some people are going to get screwed because regulations are supposed to protect the public. But these companies, banks, things of that sort, financial firms, less regulation, less expense they have, more money that they make. There's also an ETF for that sector. There's one called XLF. That's a popular one where you can invest in the financial sector. Also, energy. Has he been clear enough on energy? He wants us to drill, baby, drill.
I heard that.
Yeah, what's that?
Yeah, we heard that the other day.
Yeah, he talks about it a lot. So you can also invest in that sector. There's an ETF for that. XLE is probably one of the most popular ones. You can invest in the energy sector. Materials is another thing. Mining, metals, chemicals, things of that sort. XLB focuses on that sector. So these sectors, if we're right, if Trump is successful in promoting these industries, then these things should benefit. They should outperform the overall market. Make sense?
Yeah. You're basically saying deregulation supposedly lifts everybody up, all of these sectors, because they get to do whatever they want willy-nilly.
Yes. And also, of course, remember, too, he's talking about reducing income taxes for companies. that means more of the money goes to their bottom line, just like it does when you and I pay less taxes. We have more profit, right? We have more money in the bank. Same thing with companies. And so almost every company should benefit from that. Every profitable company, anyway, should benefit from that. But especially these 4 sectors that I just mentioned should be good. Now, there are risks to this. For example, Trump puts on a whole bunch of tariffs, which actually may occur almost any minute now. He's talked about putting on tariffs in Canada, Mexico, and China. Now, what if they retaliate? That could be a risk to these strategies. Also, inflation. Increasing tariffs raises the price of the goods that we're importing. That could cause inflation. Now, the other day, Trump said, in fact, I don't want to date our podcast, but just yesterday, the chairman of the Federal Reserve decided not to lower interest rates, although he had indicated some months ago that it was time to start lowering them. He didn't. Why didn't he? Because he doesn't know what's going to happen with tariffs. He doesn't know what's going to happen in general. This is a lot of upheaval that's going on in the economy, Aaron. And so no one knows exactly what's going to happen. And so the Fed goes based on data. And if the data suggests that tariffs or economic expansion is creating more demand and causing inflation to rise again, then he could actually even raise interest rates. But he's certainly not going to lower them until he has some idea that the economy is beginning to slow. So that's another risk. Also, market volatility. I mean, the market, I don't know if you watch it every day, Aaron, but I watch it, constantly, all day, every day.
Well, yeah, as soon as there's word of one way or the other. I mean, the other day we had DeepSeek came out, and all of a sudden NVIDIA tanks and everybody else tanks because they're like, what is this? And then all of a sudden everybody comes out of the woodwork and, oh, no, they're stealing information from OpenAI. They're doing this. All of a sudden, the press comes out with trying to downplay the whole scenario. So, yeah, anything comes out or Trump just says something on the win and that moves the market.
Yep. And actually something that Trump has hinted at just recently is that he may make NVIDIA's chips more difficult to export to China. So, in other words, that could curtail their sales, right? So what did Stacy do just before this podcast? I had put $10,000 into NVIDIA in, I think, 2021, and it was worth about $250,000. So just before this podcast, I sold half of my NVIDIA. I sold 1,000 shares of NVIDIA at around $120 a share, which is a bummer because it was as high as $150 not long ago. Right. But I made $115,000 on that trade.
Right. Nothing wrong with that.
What's that?
Nothing wrong with that.
No. And the reason I did is because, there may be breakthroughs that make NVIDIA's chips not as necessary. And also because Trump said that. He said he's hinted that, because, he hates China, right? So he has hinted that maybe he won't allow the export of their most sophisticated chips. He already those aren't allowed to be exported, but even some of their less sophisticated chips may not go to China. That's going to hurt their sales. I'd rather bag a profit here. And I'll tell you why. I'll give you another reason why as we continue. Got any questions so far, Aaron?
Oh, I have a lot of questions, but it'll probably make the podcast way longer than it needs to be.
Okay. Well, let me plow on because this is something that's really interesting, guys, that I just noticed. Now, remember, Trump's only been in office for a couple of weeks, but I want to tell you the 3 major headlines on CNBC yesterday, and here they are. Trump media surges after expansion into financial services, including crypto and ETFs rather. Okay. So in other words, Trump is getting into the financial services industry while he's the president of the United States. Right. This is a money grab. And who is sitting on the dais with him when he's getting sworn in? Elon Musk. Also, Mark Zuckerberg of Facebook. Also, the head of Google. So the billionaires are certainly having influence over this government. Yep. And this is the observation that I made the other day. If these guys have this much influence, Trump is getting into financial services. Do you think he's going to allow regulations to hurt him? So be on that team. This is the purpose of this podcast.
Right. Whether you agree with it or not is what you're saying. Is whether you agree with how this is being run. I mean, you and I talked the other day about this being similar to the Gilded Age and stuff like that.
Yeah.
But whether you agree with what they're doing, we have no control over it or not. But you're basically saying look at this. This is how you can make some money too.
Yes.
Siphoning off these, whatever it is they're choosing to do with the laws.
Yeah. I don't mean to be indelicate, but this is a time, more so than any other time since I've been investing in the stock market, where it's patently obvious that being a rich guy is going to benefit you. A rich white guy, even, you might say. I mean, really, it's obvious what's going to happen here. Do you think Elon Musk is going to have some issues with regulations? He paid $250 million to get this guy elected. Trump himself is trying to make money as we speak, in these areas. So I don't care whether it's right or wrong. That's a whole nother podcast. But it is happening, and I want to be on the team that's going to win, right? If I'm going to invest my hard-earned money. Okay, now that was the first thing. Now, second headline. These are the three main headlines from yesterday. Second headline: Elon Musk X begins its push into financial services with Visa deal. Okay, think he's going to run into some regulatory headwinds? Okay, last one. Crypto industry gets quick return on Trump investment after pouring millions into campaign. One of the main things, the crypto industry poured, I'm going to say hundreds of millions of dollars into Trump's campaign because they want less regulation. Have you heard the guy saying he's going to create a crypto, what's it called? He's going to get a pile of crypto for the United States. So he's not going to do anything to hurt crypto. He's not going to have regulations. Now, those regulations may involve regular consumers getting screwed, because that's what regulations are for, is to keep people from getting screwed. But this is what's going to happen. So what Stacy did, what I did, was I bought I own some crypto now. Do I like crypto? I think crypto is a Ponzi scheme. I hate it. I think it has no intrinsic value whatsoever. But I put another 10 grand in it the other day, because that's where this is going. That's, in fact, what I'm going to tell you next is I'm going to quote somebody who was doing a couple of really smart guys, and they said, you want to guess where the puck is going. Okay? So where do you think the puck is going? The puck is going to people who support Trump and people who are making money from Trump. So that's where I'm going to be. Whether or not I like crypto, I think it's going to go higher, because there's nothing to keep it from happening. Does that make sense?
Makes sense.
Do you own any crypto?
I did a long time ago, and once I felt it was a Ponzi scheme, I got out of it and decided, buy houses instead.
And I'm not the only one who's saying this. I'm not the only one who's following the money. Okay, obviously a lot of people are. And when everybody piles into a trade, and especially when that trade becomes overbought, then there's always the risk of severe downside, right? And that's why one has to be very careful. I mean, in general, if I'm advising you how to invest, Aaron, I'm going to tell you to buy stocks whose earnings are not, or whose stock price is not so in excess of its earnings that it's nonsensical. For example, right. if a company like Microsoft, which I own, Microsoft historically trades at a price-earnings ratio of 20. That means if a stock's $200 and it earns $10 a share, then that's a 20 price-earnings ratio. Now, if Microsoft typically trades at 20 times earnings, and now it's trading at 40 times earnings,
right?
Then
now
that increases the risk.
Right,
What?
and that's highly risk. But explain to people what 40 times earnings actually means.
Okay, a price-earnings ratio, there's trailing 12 months earnings, and then there's future earnings, estimated earnings for the next year. So if Microsoft is trading at 40 times earnings and it's expected to earn $10 a share, then it would be trading at $400 a share. Okay? So it's trading at 40 times that $10 earnings. That's what it's expected to earn in the next year. Historically, though, it's only traded at 20 times earnings. So that stock is overvalued, right? So if that price earnings ratio compresses back to 20, you've lost half your money. The problem is, and what we've seen actually for many months now, is that the whole stock market is overvalued, historically, way overvalued. And especially since Trump's become president. Hey, Elon Musk, what's his car called? The Tesla. The Tesla, yeah. Tesla has doubled in price and value since Trump became president. And actually, just yesterday, they announced their earnings, and they missed on every single metric. In other words, they didn't earn as much as they were supposed to. They didn't get as much revenue as they were supposed to get. And guess what the stock did? It went up. Because nothing bad is going to happen. And well, also, Musk got online and told people he was going to have robo-taxis this year, and he's going to have robots, and all that.
Right.
And,
well, that's
and maybe
what he
that's
does.
True. I mean,
but that's what he does. He deflects. He always.
Yeah.
But that's the world we live in. Because the other question I have for you, much like this podcast where you're talking about everything every day, we live now in this world where we even have Reddit guys in the investment system. There's whole threads. Guys, this is what we're going to invest in today. This is what we're going to do. We're going to jack this up. I mean, this is the system we live in today.
Yes.
And as even me and my wife, we talk about this. We stay out of the stock market because of a lot of this. Because we're like, it's not where we're investing anymore. It's almost like there's so much froth that it scares you away from it. Like you said, there's PE ratios that are 40 times earnings, and all of these guys are just pushing the market this way. You have Elon Musk, you have Donald Trump just saying wherever they want willy-nilly, and that changes the market. It's like, well, where is that standard line? And now the stock market goes like this, but it's like, that's not reality.
It's risky as hell.
And then you got pressure like BRICS, which is pressuring in on the American dollar, and that's pressuring our whole empire and the value of the dollar, which is personally to me is why all of these rich guys are freaking out and why Donald Trump is freaking out. So within that, I have a hard time with this whole getting on board with what you're saying.
As you should. I mean, Tesla is basically a meme stock now, and by that I mean it like crypto, not tethered to reality in any damn way. Right. Now, here's the thing: the market's overvalued, and particularly in technology. Not every stock is overvalued in the market today, but many are, and the problem is stocks can remain overvalued for years. They can also grow into their earnings. In other words, if you've got a stock trading at a 40 PE and it starts making a hell of a lot more money, then that PE starts shrinking and it could get back to normal, right? So if the economy expands, what people are doing when they're betting on stuff like this is they're saying, okay, fine, Tesla's not doing well today. But when those robots come out and when those robo-taxis come out, he's going to be making a fortune, and it's going to grow in, its earnings are going to grow into its share price. Now, is that true? Maybe, maybe not. And this is, okay, there was a .com. Now, you weren't investing for sure back in the year 2000. No. I was doing commentary on television, and people were buying stuff that made no sense. In other words, when the internet first became a thing, people were buying stuff that made no sense whatsoever. The companies that were going public weren't even making a profit, and they never did. A lot of them went out of business. Some obviously stayed alive, but it was just rampant betting, really. Speculation is the word I was groping for. And there's some of that in the market today. Now, that doesn't mean it can't stay overvalued for a long time, but that's why I said at the beginning of this podcast, pay your money and take your chances, but don't take what I'm doing. Because I have lots of money. I've been doing this for a really long time, and I know the risk. And if you don't, you're best staying with things that do make sense, things with normal price earnings ratios, and just waiting. So
that's pretty much the key what you said just right there. Because okay, let's say like you don't need any more money. You're playing with money that you've actually earned in the stock market, and you're seeing where it goes. You make more, great, it's awesome. So let's say, like me, we don't have a whole lot of money to just mess with and throw away, but we're like, we want to stay focused. Now, I saw something the other day about, there was a Defiance ETF, I think it was called. I'm not really sure the name of it, but basically it took out the Mag 7 and it invested in the rest of the S&P 500. Would you suggest something like that?
Yes, I would. There's also what's called, okay, let me back up a step. The S&P 500 is now dominated by the Mag 7. And I ordinarily, I might be able to rattle off all 7, but I'm not going to try to do it right this second. But you know what they are. They're Microsoft, they're Apple, blah, blah, blah. They're Tesla. But anyway, Amazon, I'm rattling them off anyway. Those stocks, the S&P 500 is capitalization weighted. In other words, those stocks, only 7 of them have an over input into what the whole value of the S&P 500 is. So there's also that's market weighted. There's also called a equal weighted S&P 500, which is equal weight to all 500 stocks in the index. Now, that would be the most conservative thing you could do. Essentially, like you said, taking out the 7 that are the tail that's wagging the dog. It is if you're a normal investor, and by the way, I own an S&P 500 index fund. I own lots of it. I mean, I have a few $1 million in the stock market. So I do own funds that invest in everything, invest in the whole American economy. And I also do things like buy NVIDIA, and I bought Apple in 2001. I've owned Microsoft for many years. So I own individual stocks, but these are things that I'm willing to take a risk on and that I understand and that I've been doing for a really long time. So if you're not that person, if you're not like me and you don't want to gamble, then you are better off getting an equal weighted S&P 500 index fund and just being patient. If it doesn't bother you to see these things go to the moon when you're not on them. But another thing you can do too is both. You can have a substantial part of your savings, your long-term savings, into an S&P 500 fund. And then you can I'll take a risk on, the industrial sector with an ETF, or the technology sector with an ETF. In fact, I'm about to give you another couple of ideas in that same regard.
Would you say if I had a lump sum of money to invest, would you say 70% in the no risk and then split the 30% in between all of the other sectors?
Well, remember, this isn't no risk. The market can go down 25% in a year.
This is very true. I mean, I should have said low risk. Less risk. Yeah.
Less risk. And remember, too, I think also, and I've said this on this podcast, the market just went up 25% 2 years in a row. I mean, do you know how often that happens? Almost never. And you know what the average, what this is, Aaron? I don't want to put you on the spot. What's the average return for the stock market over the last 100 years?
100 years? It's like, what is it, 6%?
Well, it's 10? More than that. With reinvested dividends, it's close to 10.
10, yeah.
Okay. And so the stock market just went up 25% 2 years in a row. You would probably agree that sooner or later, it's going to revert to the mean. Yeah. And the only way it can do that is to go down. And in fact, in 2001, Aaron, when I was on TV doing this, I said those exact words just before the market crashed, before the dot-com bubble burst. Because trees don't grow to the sky, folks. So sooner or later, this stuff's going to go against you. It's going to go south. And how long that takes, who the hell knows? I don't.
Right. Whether it does in our lifetime or not, we don't know.
Oh, it'll probably do it in our lifetime. I mean, maybe not my lifetime, but you're a lot younger than me. But I know I'm sure it'll happen. I'm sure that we'll have a market that goes down in my lifetime. Absolutely.
Well, good. That's good to know. That means keep a little bit of money on the side then.
Oh, yeah. And by the way, I'm not investing. I mean, I have a lot of money in the stock market, but I have a lot of money that isn't in the stock market too. So I'm not all in. It sounds like I'm a wild gambler, but I'm a very conservative guy. And so, when stocks are getting high, you know what? The most I've invested was 2008, 2009. Actually, in March of 2009, I backed up the truck because the stock market was horrible. And I figured, GE was like 7. I bought JP Morgan at $25 and it's now at $260. Because in other words, what I'm trying to say is, right, I try to buy stocks when they're cheap, not when they're expensive.
Right. You might have missed a few of those in the beginning of your career, and you saw it there because you went by the old Warren Buffett adage, don't bet against America. Yeah,
that's why I backed up the truck and bought a bunch of stocks in 2009, because either the market's going to go up sooner or later, or you best be buying shotguns and canned goods. Because, if we're going to go to zero, then we're all in trouble. If we're not going to go to zero, then buy when everything's going to hell. When everyone thinks the sky is falling, that's really when to buy. This really isn't. The stock market's really overvalued now. But I'm just trying to give you some ideas of things that I'm doing and along with those provisos, Now, I want to mention one more thing. I know we've probably already gone over, but I'll mention one more thing. I was watching a couple of guys on CNBC the other day. I watch a lot of CNBC, and I read a lot of CNBC and others websites as well. Okay, anyway, these guys, Peter Collins and Vincent Daniel are their names, and they were one of the people, one of the team that was in The Big Short. Mm-hmm. So they bet against the housing market in 2009, 2008, and they made hundreds of millions of dollars. They started off with like $200,000. They made like $120 million. Oh. And so now they run a hedge fund. It's actually just their own. They don't really take other investors. They made 66% last year.
Wow.
And one of the things they did to make that was they bought a stock that doubled. And that stock was Fannie Mae and Freddie Mac, 2 stocks. Okay, these are quasi-governmental organizations that still have public, they're basically run by the government, but they still have stock. And the stock was like 1, 2. And because Trump was coming in, because Trump had mentioned reprivatizing these companies when he was president before. And when they realized that he might become president, they bought into these stocks at like 2, and now they're 6. And so these guys made a ton of money by seeing where the puck was going, right? And so what I wanted to tell you was, before we quit today, is what they suggested doing now. And this is going to sound weird, but they suggested not being in these stocks that are trading at 40 times earnings and going to other countries where stocks are still cheap. And those 2 countries that they mentioned were Brazil and China. And what I'm going to do, okay, they do have ETFs too, of course.
Yeah.
But okay, Alibaba is one of the biggest companies in China. I'm sure most people are familiar with it. But they're not, they sell products, but they also are just like Google. They're doing AI. They have, cloud services and all this other stuff, and they're trading at 11 times earnings. Google's trading at 30, 40 even. I don't even know. It's high. So they're going to places, they're saying, we're not investing in these companies that are already overvalued. We're going to go where the money isn't. And then we're going to be patient and we're going to wait. If the dollar falls, and that's a big F, because tariffs could make the dollar go higher. I'm not going to get in the weeds on the dollar. But if the dollar falls, these companies, these countries could become spots where people want to go. And so these guys are trying to guess where the puck is heading. They think the dollar could fall. They think Brazil and China could be good bets. And so I have not done this yet. I literally was going to do this before we got on the podcast. I sold, as I said, half my NVIDIA, and I'm going to buy Alibaba. And now, big risk, because obviously one thing you know about Trump is that he's not a fan of China.
Yeah.
But it is what these guys are smart.
But then again, let's remember that these guys designed BRICS together. Says like in the early 90s. And let's remember that combined, these guys have grown. BRICS has grown as a value. Correct me wrong, but I believe it's a digital currency amongst these countries that have gone together. Trump shouted out in November, it's like, what did he say? Something about, when you say we require a commit from these countries, BRICS currency will never be backed by the US dollar, blah, 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 blah. So, I'll tariff the crap out of you. Then literally 2 months later, Indonesia joins BRICS, a country of 285 million people.
Yeah.
So I understand what you're saying with these guys investing in it. I mean, this is a force that doesn't seem to be stopping.
Yeah. Now, what Trump has said too, now these guys, okay, first of all, let's explain what BRICS is. This is a bunch of emerging markets.
Yeah.
The C's for China, the B's for Brazil, Russia is R. Anyway, so that they're getting together and saying, screw the dollar, we're going to have our own currency. Because the dollar being the dominant currency in the world is super helpful to the United States for many reasons. So, but what Trump has said just in the last week is, if you tried to usurp the dollar as the world's currency, we're going to tariff the hell out of you. So he's out there using tariffs not as a bargaining tool for trade, but as a threat. He's throwing the United States tremendous economic wealth around and threatening other countries with it, just like he did with Colombia. 25% tariffs if you don't take your people back. Right. And no president's ever done that before. Usually tariffs are used to protect industries, to retaliate against tariffs from other countries. He's just using it as a baseball bat to get what he wants.
Right. But he also used that towards oil, towards Russia, and Biden also did the same thing.
Oh, yeah.
And Russia turned around and said, fine, hey, BRICS, will you buy our oil? And they said yes. So, I mean, throwing his weight around that we're doing could actually force all these other countries into BRICS. So I'm just saying none of this stuff could work. And like you said, investing in these little things that are of lower value than the overinflated Meg 7 might be something. But like you said, it's highly risky.
It is highly risky. But that's the kind of risk I'm willing to take with some of my money. And usually what I do, in fact, this is funny, because what I did with NVIDIA, I usually take a half a position. So when I put $10,000 into NVIDIA, I was going to ultimately put in $20,000. So I was prepared for it to drop more so that I'd be able to put in more money, right? It never dropped. I bought it at $50 a share, and basically it went up 1,000%. And I never was able to buy the other half. So I should have $500,000 in NVIDIA instead of $250,000. But this is what happens, and I'm happy with what I accomplished. So I'm gonna take a small position, I think, in Alibaba. Maybe I'll put in $10,000, just like I did with NVIDIA, and see what happens. Because I'm prepared to be wrong. As a matter of fact, just when I sold NVIDIA just a while ago, sold half of it, and I sold it like 116, and I think it immediately went to 119. And there was a time in my life when I would have gone, holy cow, I just left $3,000 on the table. And now it's like, oh, well, it doesn't, this is the way it works. This is just what happens.
Right.
So anyway.
You still won.
Yeah, well, obviously it's easier to not bitch when you won big anyway. But I mean, it could go back to 150, and I'll be going like, shit, I left $30,000 on the table. But anyway, this is what I'm doing, and this is why I'm doing it. And so I just want to pass all that stuff along. And let's do this more often.
But, yeah, we should. Yeah, but you only win if you do take it off the table, though.
Yes, that is also true. That is also true. Because I owned a stock not that long ago. I think it was like in 2009-ish. Cliffs Resources. It's an iron ore producer. And I bought it at 6, and it went to 110. And you know what? It went back to 6, and I didn't sell it. So that's why we want to make sure we take a little money off the table and then play with the house's money, like you said earlier.
Cool. Well, you're giving me some ideas.
Cool.
This is a good podcast. I like it.
It was a good podcast.
Because I'm always freaked out about stocks, and I'm pretty sure everybody that watches us is freaked out about stocks. So,
well, it's one thing to do, but and as I've said on this podcast and many other times, I've admonished people: if you're laying in bed at night and you're staring at the ceiling because you're worried about your stock investments, then you have too much money in the stock market. Take some off the table. Don't ever put yourself in a position where you have to win. You ever see someone desperate to win when they're gambling? Do not be that person. Be a person who makes intelligent decisions and lives with your mistakes, of which, by the way, I have made tons. I want to make sure people, I'm not here bragging. I have made money. I've also lost money. And, you got to get to the point in your life where you can accept it either way. Anything else?
That's it. Let's wrap this up.
One quick reminder. Tell your friends. Tell your parents. Call up your ex. You haven't talked to her in years. Tell her to watch the podcast. Anyone.
Yes, and hit that like button, subscribe, and please comment. Tell us what you guys want to hear, because we're just coming up with stories out of the blue, and we actually read those comments, and that'll help us format stories that you want to hear.
We're here to tell you.
Yep.
Aaron, always a pleasure, my friend. I will probably see you over beers this weekend.
Hopefully.
Take care, buddy. I'll talk to you soon. And folks, have a good one and have a profitable day. Later.